The price volume trend, commonly known as PVT, is a technical analysis indicator that combines price and volume data to measure the strength of price movements. At its core, PVT helps traders determine if a price movement is supported by significant trading volume, which makes that movement more reliable as a trading signal. To understand PVT, we first need to look at the relationship between price and volume in market movements. Here we have a simple price chart showing an upward trend over time. Below the price line, we can see the corresponding trading volume for each period. The price volume trend indicator analyzes both price changes and volume to create a cumulative line that shows the overall money flow into or out of an asset. Notice how the PVT line rises more steeply when price increases are accompanied by higher volume, indicating stronger buying pressure. Let's look at the key characteristics that make PVT a valuable tool for technical analysts. First, PVT is a cumulative indicator that builds over time, similar to on-balance volume, but with a more refined approach. Second, rather than adding or subtracting the full volume like some indicators, PVT adds or subtracts only a portion of the current volume based on the percentage price change from the previous period. Third, this approach helps traders identify whether price movements have genuine volume support, filtering out market noise. Why should traders care about the price volume trend indicator? PVT confirms whether price movements are supported by significant volume, making them more likely to continue. It helps filter out price movements that lack volume support, which are often short-lived or subject to quick reversals. Additionally, PVT can identify potential market reversals when it diverges from price action, signaling that the current trend may be weakening. Let's compare price movements with strong volume support versus those with weak volume support. On the left, we see a price uptrend with increasing volume. The PVT would show strong confirmation of this trend, making it more reliable for trading decisions. On the right, we see a similar price uptrend, but with declining volume. The PVT would identify this as a potentially weak move that may not be sustainable. The PVT calculation adds or subtracts a portion of the current volume based on the percentage price change. This formula shows how each day's value is calculated and added to the previous PVT value. In summary, the price volume trend is a powerful volume-based indicator that helps traders confirm price movements and identify potential market reversals by analyzing the relationship between price changes and trading volume. The price volume trend, or PVT, uses a mathematical formula that builds on previous values while incorporating current price changes and volume. Let's break down each component of this formula. It starts with the previous PVT value, which makes it a cumulative indicator. Then it adds or subtracts a portion of the current volume based on price movement. The key insight is how price changes affect PVT. When price increases, a portion of the volume is added to the previous PVT value. When price decreases, a portion is subtracted. Let's work through a simple numerical example to see how PVT is calculated. We'll start with an initial PVT value of 5,000 on day 1. On day 2, the price increases from $100 to $102 with a volume of 6,000. We calculate the percentage change as 102 nas 100 per 100, which is 0.2 or 2%. Multiplying this by the volume gives us 120, which we add to the previous PVT. On day 3, the price decreases from $102.90 with a volume of 7,000. The percentage change is 99 to 102, 102, which is approximately 0.029 or minus 2.9%. Multiplying this by the volume gives us negative 216, which we add to the previous PVT, resulting in a decrease. The PVT formula offers several key insights. It's cumulative, building upon previous values like a running total. The formula weights volume by the percentage price change, so larger price movements have a more significant impact on the indicator. This formula creates an indicator that combines price movement with volume, giving us insight into the strength behind price trends. PVT and OBV are both volume-based indicators, but they differ in how they incorporate price data. The main difference lies in their calculation methods. OBV uses a binary approach, while PVT considers the percentage of price change. On-balance volume adds the entire volume on up days and subtracts the entire volume on down days, regardless of how much the price changed. Price-volume trend, however, multiplies the volume by the percentage of price change, making it more sensitive to the magnitude of price movements. This fundamental difference creates several important distinctions between the two indicators. Let's visualize the difference with an example. Here's a price chart with corresponding volume. Now let's see how PVT and OBV respond differently to these price and volume changes. Notice that when price changes are small, OBV still makes large moves, while PVT's response is proportional to the actual price change. This nuanced approach gives PVT several advantages over OBV when analyzing market trends. Because PVT considers the magnitude of price changes, it provides more accurate signals about the strength of trends and is less prone to false signals in choppy markets. In summary, while both indicators track volume in relation to price, PVT's more nuanced approach makes it a potentially more reliable tool for technical analysis. PVT serves as a powerful tool for trend confirmation in technical analysis. When both price and PVT are moving in the same direction, we have strong evidence of a reliable trend with good volume support. Let's examine our first example, an uptrend confirmation scenario. As the price chart shows an upward trend, notice how the PVT indicator also rises, confirming the price movement. At the breakout point, both price and PVT accelerate upward significantly, indicating strong volume supporting the price movement. When PVT confirms a price breakout like this, it indicates the move is backed by volume and likely to continue. Now let's look at how PVT confirms a downtrend. In this case, as the price declines, the PVT also shows a consistent downward trend. Notice the breakdown point where both price and PVT accelerate downward. This confirms strong selling pressure with volume. The aligned movement of price and PVT in a downtrend indicates that selling is backed by volume, suggesting further price weakness ahead. Let's summarize the key benefits of using PVT for trend confirmation. First, PVT validates price movements by confirming that volume is participating in the trend. This improves trade timing, especially when entering on breakouts. Additionally, using PVT reduces false signals as price moves without PVT confirmation often fail. Finally, it helps traders make more objective decisions by removing emotional bias from trend analysis. Remember, trend confirmation is one of the primary and most reliable uses of the PVT indicator in technical analysis. Divergence is a powerful concept in technical analysis that can help identify potential trend reversals before they happen. Bullish divergence occurs when price makes lower lows, but the PVT indicator makes higher lows. This suggests the downtrend is losing momentum. Here we see the price declining, forming lower lows, while the PVT is showing higher lows. This divergence often signals a potential reversal to the upside. Notice how the price makes a lower low here, while the PVT makes a higher low. This is the key divergence that traders look for. Bearish divergence is the opposite scenario. It occurs when price makes higher highs, but the PVT indicator makes lower highs. Here, we can see the price rising and making higher highs, while the PVT fails to confirm by making lower highs. This suggests the uptrend is losing steam. Look at this clear divergence. While price reaches a higher high, the PVT indicator makes a lower high. This warns of a potential reversal to the downside. Let's look at a real chart example where we can see both bullish and bearish divergences in action. Here we see the price action moving through both downtrends and uptrends. Below is the PVT indicator that we'll use to identify divergences. First, notice this bullish divergence in the early months. While price makes a lower low, the PVT makes a higher low. This suggests buying pressure is building despite declining prices. This bullish divergence provided a great buy signal, as we can see the price subsequently reversed into an uptrend. Later in the chart, we can identify a bearish divergence. While price reaches a new higher high, the PVT fails to confirm and instead makes a lower high. This bearish divergence signaled a potential reversal and provided a sell opportunity before the trend actually changed direction. When trading with PVT divergences, remember these important guidelines. Wait for price confirmation before entering a trade. Use additional indicators for confirmation, Set appropriate stop losses, look for stronger divergences for stronger signals, and note that divergences work best in trending markets. Combining PVT with other technical indicators creates a more robust analytical framework. Using multiple indicators offers several advantages over relying on PVT alone. Let's examine several indicators that work particularly well alongside PVT. Let's visualize how PVT works alongside other indicators on a price chart. First, we have the price volume trend indicator, which measures volume flow adjusted for price changes. Next, we can add the relative strength index, which measures momentum. RSI helps identify overbought or oversold conditions. Adding moving averages to our price chart helps identify the overall trend direction. Here we have 50-period and 200-period moving averages. When multiple indicators confirm each other, we get stronger trading signals. Notice how the PVT trend aligns with price movement and RSI momentum at these key points. When combining PVT with other indicators, focus on complementary information. Use PVT for volume confirmation, RSI for momentum, and moving averages for trend direction. Let's examine effective trading strategies using the price volume trend indicator. The first entry signal we'll explore is a bullish divergence. This occurs when price makes lower lows while PVT makes higher lows. Notice how the price continues to decline, making lower lows. Meanwhile, the PVT begins to show strength by creating higher lows. This divergence suggests accumulation is happening despite the falling price, signaling a potential buy opportunity. Another powerful entry signal occurs when PVT breaks above a significant trend line. When PVT breaks above a descending trend line, it indicates increasing buying pressure that could drive prices higher. Knowing when to exit trades is equally important. Let's look at exit signals using PVT. A bearish divergence forms when price makes higher highs while PVT makes lower highs, signaling weakening momentum. Notice how the price continues to rise while PVT begins to show weakness. This indicates distribution is occurring despite rising prices. This is a clear signal to exit your long position or potentially enter a short position. Proper risk management is crucial when trading with PVT. Here are key principles to follow. Most importantly, never trade PVT signals in isolation. Always confirm with other technical tools. Now let's put everything together in a complete PVT trading strategy. This strategy combines price action with PVT confirmation. We enter when price breaks above resistance and PVT shows strong upward movement. Always place a stop loss below a recent swing low to manage risk. We exit the trade when PVT starts showing weakness or divergence from price, indicating momentum is slowing. To improve your PVT trading results, combine it with these complementary indicators. Using multiple indicators that measure different aspects of market dynamics significantly improves your trading accuracy. Section 10. Limitations and best practices of the price volume trend indicator. While PVT is a powerful volume-based indicator, it comes with several important limitations. PVT can generate false signals, particularly in choppy markets where price movements are erratic but lack directional momentum. The indicator is also unreliable when applied to securities with low trading volume, as small volume changes can create disproportionate moves in the indicator. During ranging markets, PVT may lack clear direction, making it difficult to interpret signals effectively. Finally, PVT can be susceptible to volume spikes and anomalies, which may distort the overall trend picture. To maximize the effectiveness of PVT, traders should follow these best practices. First, apply PVT to liquid securities with significant trading volume. This helps ensure that volume changes are meaningful and representative of market sentiment. Daily charts often provide the most reliable signals for PVT analysis, as they filter out the noise present in lower timeframes. Always confirm PVT signals with actual price action. The price should confirm what the volume indicator is suggesting before taking action. Combine PVT with other technical indicators for signal confirmation. No single indicator provides a complete market picture. PVT should be viewed as one component of a comprehensive trading approach. An effective trading system integrates multiple analysis tools. PVT works best when combined with price action analysis, trend indicators, oscillators, and support and resistance levels. In conclusion, PVT is a valuable volume-based indicator, but traders must understand its limitations and apply best practices. Remember that while PVT has limitations, applying proper techniques can enhance its reliability as a trading tool. Most importantly, use PVT as part of a broader trading strategy, not in isolation. By understanding both its strengths and weaknesses, you can use PVT effectively to enhance your market analysis.